The year is 2029. The heart of Manhattan pulses with anxiety. Inside a towering glass building on Wall Street, traders freeze mid-sentence. Monitors blink with sudden alerts. Breaking news spreads like wildfire. A major foreign government has just dumped over $1 trillion in U.S. Treasury bonds. Global markets begin to convulse. The dollar value plunges within minutes. In Chicago, banks start restricting withdrawals. In Los Angeles, gas stations halt transactions. In Atlanta, grocery store shelves begin to empty, not from supply issues, but because no one knows how much the dollar is still worth. In a matter of hours, the foundation of the world economy begins to crack. The currency that once signified stability is no longer trusted. For the first time in modern history, the unthinkable has happened. The US dollar has collapsed. It sounds like the plot of a high-stakes thriller. But what if it really happened? What would follow? What happens when the currency that keeps the world spinning suddenly loses all value? The power of the dollar. To grasp the magnitude of such a collapse, we need to understand why the US dollar holds so much power. This green piece of paper is not just an American currency. It is the economic lifeblood of the modern global system. Over half of all foreign currency reserves are held in dollars. The vast majority of international trade is conducted in dollars, whether it's oil from Saudi Arabia, cars from Germany, or electronics from China. This dominance did not happen by accident. After World War II, the Bretton Woods Agreement established the US dollar as the world's reserve currency. Back then, it was tied to gold, giving it inherent value. Even after the US severed that link in 1971, the dollar continued to reign supreme, backed by America's unmatched economy, military presence, and global political influence. Over time, nations began to store their wealth in dollars. They priced their exports in dollars. They lent and borrowed in dollars. It became the language of money itself. This makes the dollar not just a symbol of wealth, but of trust. If that trust is broken, the consequences would be far-reaching. What could cause a collapse? A currency like the US dollar doesn't collapse without extraordinary causes. It would take a perfect storm of internal mismanagement and external rejection to trigger its downfall. Imagine this scenario. The US government continues to raise its debt ceiling with no long-term solution. The Federal Reserve prints money at unprecedented levels in an attempt to stimulate a sluggish economy. Meanwhile, political gridlock in Washington creates chaos. Now, add a trigger event. A major foreign power such as China suddenly decides to abandon the dollar and shift to another currency. Others follow suit. The dominoes begin to fall. In recent years, there have been signs of a potential shift. China and Russia have increased their gold reserves. The BRICS nations are discussing an alternative trade currency. Even global corporations have begun to explore deals in euros or yuan. If a tipping point is reached, the exodus from the dollar could accelerate. Once confidence evaporates, a collapse could happen quickly. Trust is hard to earn, but dangerously easy to lose. The immediate aftershock. Should this happen, the first wave of consequences would hit fast and hard. In the United States, inflation would erupt almost instantly. Import prices would surge. Everyday essentials like gasoline, medicine, and food would become painfully expensive. Supply chains would grind to a halt as businesses struggle to pay for foreign goods. People would rush to withdraw savings, fearing devaluation. Banks would respond by freezing access. Stock markets would plummet. Businesses would fold. Jobs would vanish. Americans, once used to financial stability, would face a new reality, one marked by uncertainty and scarcity. Globally, the panic would spread. Countries holding trillions in US bonds would see their assets become nearly worthless. Trade would slow dramatically. Oil, traditionally priced in dollars, would surge in cost or shift to new pricing models. Major economies in Europe, Asia, and Latin America would scramble to adapt. Airlines might cancel international routes. Ports could suspend operations. Panic would ripple through every continent. A world without a dollar standard. As the dust settles, a new question would emerge. What replaces the dollar? There would be no shortage of contenders. China would likely push the yuan as a new global standard, especially backed by its growing role in international trade. The European Union might advocate for the euro. Others might look to a decentralized alternative, such as a global digital currency or a crypto asset backed by tangible reserves like gold or energy. But replacing the dollar is more complicated than simply choosing a new currency. It requires the world to trust in something else. That means believing in political stability, economic transparency, and market liquidity. So far, no rival currency has matched the dollar's blend of all three. Until a new standard is fully adopted, the world would operate in confusion. Contracts written in dollars would be challenged. Investments would stall. Trade deals would be renegotiated, line by line. The global economy would essentially need to reboot. Parallels in history. Although the dollar has never collapsed, history has shown us what can happen when trust in a currency disappears. In 1923, post-war Germany saw its currency spiral into worthlessness. Hyperinflation made savings vanish overnight. Workers were paid twice a day because their wages lost value by lunchtime. Bread cost billions of marks. In Zimbabwe during the 2000s, inflation climbed into the trillions. The government issued $100 trillion bills which couldn't even buy a meal. More recently, Venezuela experienced a similar fate. Years of economic mismanagement and oil dependency led to a collapse in currency value. Ordinary citizens watched their life savings evaporate while hunger and unemployment surged. But all of these were local collapses. The fall of the dollar would be different. It would be global. It would be historic. The human cost. What would life look like in the weeks and months following a dollar collapse? For the average American, life would change overnight. Basic goods would become luxuries. Wages would no longer stretch across the week. Credit would vanish. Renting, buying, or even fueling a car would become unaffordable for many. Panic would lead to unrest. Shelves in stores might empty, not because there are no products, but because people would be desperate to hold on to anything of value. The government might implement price controls or rationing. Emergency powers could be declared. Entire industries could be nationalized to maintain order. Beyond U.S. borders, countries tied closely to the dollar would suffer their own crises. In the Philippines, for example, overseas workers who send home dollars would find their remittances suddenly worthless. In Africa and Latin America, where debt is often dollar-based, economies would contract violently. Global inequality would deepen. The poor and middle class would carry the weight of a crisis created far beyond their borders. Winners in a world of losers. Not everyone would suffer equally. Nations that have diversified their reserves would experience less damage. Countries with stockpiles of gold or strong commodity exports might see their currencies rise. China, with its growing control of trade and infrastructure, might seize the moment to position its currency as the new global standard. Cryptocurrencies could see a surge in adoption, particularly decentralized coins with fixed supplies. In times of institutional failure, people often turn to systems they can trust, or at least ones that feel less corrupt. Investors who previously moved wealth into gold, silver, or real estate would likely benefit. Hard assets gain value when paper assets fall apart. Still, even in a crisis with winners, the collective loss would be staggering. Is this really possible? Skeptics argue that the collapse of the dollar is unlikely. They point out that during the 2008 financial meltdown, investors ran to the dollar, not away from it. The dollar, they say, is the world's ultimate safe haven. And they're not wrong. America still has the world's largest and most dynamic economy. The Federal Reserve remains a model for central banks. The dollar is deeply embedded in global trade and finance. But nothing lasts forever. The Roman Empire once minted coins used across continents. The British pound once ruled the oceans of trade. Empires fall. So do currencies. It would take time, effort, and a massive shift in global behavior to undo the dollar's dominance. But in an age where change is faster than ever, even the most solid institutions can crumble. A future. Reimagined by 2035, the world could look very different. The dollar, once a pillar of modern civilization, might be relegated to history books. In its place, a new digital currency might govern trade. Perhaps it would be backed by a coalition of nations. Or maybe blockchain technology, once seen as a fringe concept, becomes the new foundation of finance. The United States would survive, but its role would be redefined. It would need to rebuild trust, reform policy, and participate in a new global economy it no longer controls. Other nations would rise, and new systems would emerge. From crisis, innovation often follows. But the scars of a dollar collapse would remain for generations. The dollar's collapse is not just a financial event. It is a story of power, trust, and the fragility of the systems we depend on. It reminds us that no currency, no matter how strong, is immune to the consequences of hubris or neglect. So the next time you hold a dollar bill, ask yourself this: is it just paper, or is it belief? Because in the end, it is not ink or cotton that holds the world together. It is trust. If you found this story compelling, don't forget to like, subscribe. See you on the next video.